Yeah, Netflix was a doji sandwich, I think you're saying? Yeah, it was a doji sandwich. Yeah, the doji was a little bit far removed from the previous day's candlestick, but it was a doji sandwich, and it's breaking out pretty nicely, and it's pretty much put in the same move today that it put on that it put on Friday. Friday went from 940 to 963, so it did 23 points. Today it's gone from 977 to 997, so it's done 20 points. So it's to match the previous candle on Friday. It's got to go about another $3. It had some resistance around 944.40, which has gotten through by about $2. The next resistance level on it is 1,008. I could also make a case for another one at 999.40, which is by about $3 higher.
Rackspace Tech announcing Rackspace AI Business, a comprehensive AI-ready platform engineered to optimize enterprise AI workloads.
Watch FedEx coming down here right to a pivot point. Again, I took Amazon earlier and I'm out of Amazon. That's the only thing I've traded here today. CVS looking pretty weak, and on a green day in the market, I don't like to see this thing down 1.5%. I wouldn't mind if I was out a couple more weeks on the expiration, but I'm not. I've got expiration this week, so I'm likely going to have to take this thing off. Again, I'm going to watch and see what it does. It's right at the 15 right now.
CLF Cleveland Cliff talked that they may idle out some of their Dearborn facilities.
Going for a walk?
I'm going for a walk,
Okay, nice day.
not with Alan.
No, I'm going by yourself?
I'll take him again later.
Okay, you all right?
Huh?
You okay?
Yeah,
Okay.
I need to walk.
Okay.
On WIMI, mentioned as a sympathy play to MLGL.
IP, a nice setup here. International paper, up about 7% here today. But nice grinder, very nice grinder. Doesn't really care what the SPY's doing here.
On ONV, announces close of the sale of FXR program to Eli Lilly and Company.
IP kind of just drifting sideways here. It's a nice setup. IP drifting sideways, SPY drifting sideways here right now. Again, Q's approaching the 200-day moving average. There'll be some resistance there on the Q's. Again, I took Amazon. I'm out of Amazon. Netflix looks like a good setup. A lot of compression right now, though. IP also compressing. And MLGO did another big move here this morning. This is when yesterday I traded this yesterday, and had some pretty good results with it. This thing popping here right now. 200-day moving average in this thing is around $26, $26.50 or so. But it's really, really volatile. So be very, very careful on something like this. You might want to wait to see if you can get a pullback to some sort of support level on it. Very volatile. UPS getting smoked here today, down almost 4.5%. Let's see where I can find some support on this thing. It's trading at 110. There it is. Yes. Trading at 110.74, got support at 110.30, and then what's the next one? 109.40. Very, very weak stock today on UPS. Just coming down steadily. Again, we're in FedEx, which would hope to see it pull down as much. It is pulled down some, but not as much as, not like UPS. UPS getting smoked here. And I'm tempted to actually take a strangle or a straddle on UPS. Yeah, I'm gonna take a straddle on UPS. It's trading at 110.77. I'm gonna take a 110 put and a 111 call. 110 put and a 111 call. Not a big position, but I am gonna take a strangle on this thing if I can get filled. Yeah, get filled. Get filled at $1.91 for a 110 put, 111 call on UPS. It's a pretty big drop. It is coming up on support, so I wouldn't be surprised to see it start to bounce a little bit. Paid $1.91 for it, for a 110 put and a 111 call. I'm gonna pop that one in here as well. The only thing I don't like about this is having a straddle and a strangle on two stocks in the same sector. But I'm gonna probably send this out as an alert. UPS strangle. I don't know where the price is going to be at when I put this though. By the March 28th. Let's see what it's trading at. 110.81. Yeah, okay. 111 calls, and by March 28th, 110 puts. For about $1.95 now, about $1.95. Okay, I'm gonna go ahead and put that in as an alert. I'm gonna post it in the room. Get a strangle on UPS. Also have a straddle on FedEx. Again, I have a strangle on UPS, got a straddle on FedEx. And I did alert on this one. Okay. So we'll see where we go. This FedEx also coming down. UPS again. We don't care which direction these goes, which they go. We just want to see them move. Again, the market's coming right back down toward the VWAP here. I traded Amazon out of it for a profit. Had to sweat it out a little bit. Now it's coming back down again. Again, that MLGO has been another big, huge mover again today. It's up 400% yesterday. Up today about 20%, yeah, 30%. Much smaller. Yesterday it was trading off of $4 and it went up to about 15. Tesla coming in pretty good here. Again, got pretty much right to resistance and pullback. Yeah, the straddle on FedEx is pretty good at this point. You took that straddle, yeah. It's much cheaper right now. MLGO going again. Yep, it did, Shy. I traded it. When I do a put credit spread on Netflix for Friday, put credit spread, Joe? I don't know where you would go with this. I mean, if the thing is trading at 992, you'd have to be selling your put somewhere below the 960 level. All right, 960, 955. I think if I was going to do a credit spread, I'd have to do a 955, 950, and I don't know that you're going to get any kind of premium on that. I'd have to check. Suzanne, can I talk through my thesis on UPS and why you picked a strangle, please? V, buying a put or a put debit spread? Well, because I don't know that the thing is going to keep going down. Yes, good morning. I don't know that it's going to keep going down. Here's UPS. Let's take a look at UPS. All right, and why did I take a straddle on this thing or a strangle on it? Okay, so here's my support level. I got a couple of support levels. I don't want to go short this thing. I'm too close to support levels. But I think it can bounce. It can bounce an awful lot. And if I look at the ATR on this thing, it's about 255, and I was able to get in for 191, which is pretty good. And there's quite a bit of volatility built into these premiums right now because the stock has been pretty wild. But that's why I wouldn't take a debit spread on it, or a straight puts, because I don't know that it's too close to support. I mean, it's really pretty simple. I don't think I don't think it's going to keep going down. You see these levels over here? See how this is the low and the earnings is the low here? This is a support level down there. So taking this thing short, just a straight short, to me is way too risky. If it drops, it's fine. It'll work on my strangle as well. But this way, if we get some buying coming back into this thing, because this is a pretty big flush. See what it did on earnings? You see this big flush down, and you see this big bounce back up again. And if you look at where they went to, that was about 115 right there, and it came up from about 109. It's like a $6 bounce. So anything like that would give us a beautiful profit in UPS. Okay, that was my thesis behind it. And MLGO really ripped up there to 1969. I did trade it quickly this morning for a couple of bucks a contract, a couple of dollars a share. I didn't take options on it. I just took shares. I can't call these things out. This is I can point them out to you, and I know a lot of traders take these. When I point them out when I see them. What I'm watching right now is this DATS, but it hasn't really done anything. SPY coming right down to the VWAP here. And again, Tesla came right back, hit that resistance and pull right back. See, you got any questions? Trader Midas, good morning. Looks like MLGO is ripping again. Yeah, I did. I traded it again today after on a break. If you're looking at MLGO, I took it on a break above 1520 right here. I had an alert set at 1520. I took it there, and I'm out of it now. But I made some decent money on that one. It's a very volatile momentum stock, very tricky to trade. What are my general guidelines on trading momos? You stress the importance of being nimble and understanding PA. That's for sure. if there's a big move on volume on an M5 that holds as high, would that be something? I look for breaks of the daily high. You know, if it pulls back a little bit, I'll set an alert at the high, a break above the high. As long as the volume stays up, it will be something I'll try to take. And then you have to be but you do have to be nimble on these. Most Momo stocks, you got to be very careful. The reason I take them on a break above high is because that was a resistance level and it's going through a resistance level. So I'm getting in right at a resistance level as it breaks through it. Again, so I don't, I'm not coming in at the high of the day or after 4 or 5 big candles. I'm looking for a break of something that was already resistance. This is tricky trading, all right. Trading this kind of stuff is very, very tricky. It takes some good technical understanding. You have to you've got to know what the volume is. If it's it doesn't have anywhere near the volume it had yesterday in MLGO, but the price, of course, is much higher than it was yesterday. And I didn't think I'd be trading it today because I didn't think it was follow through like this, but it did follow through, and I just used that 1520, which by the way was yesterday's high. Okay. So again, I traded Amazon, made money on it, but the thing is, I wouldn't take it again right now. I don't care for this price action on it. IP, I don't like that one either right now. Netflix, pretty nice. Netflix is holding up pretty nicely here. All right. It's about quarter 12. Haven't had to do much today. Today's kind of an important day on the market. The SPY is above the 200-day moving average. The Qs are slightly below the 200-day moving average. This is a fairly importance levels right now. We'd like to see both of them. If we're bullish, we want to see both of those indexes close above the 200-day today. The SPY, if it was above it yesterday, it closed above it, and it's still above it today. The Qs haven't got to it yet. So the techs are not holding up the market as well as the SPY is. Although the Qs are up right now 0.4%, and the SPY is up 0.25%. So the Qs are outperforming to the upside. Pat's Nation. CVS was good yesterday till news. Yeah, it's CVS been a pretty big disappointment here. It bounced up yesterday off of the lows. Was still above the 8, but today it's below the 8 and right at the 15. If it stays where it is right now, I'm going to have to take a loss on it. SPY coming in here now. Looking at FedEx pulling down, and UPS still coming in. FedEx trading at 565 on that straddle. We paid 615 or 624, so we're down a little bit of money on that. Not an awful lot. UPS right now getting in at 191, trading at 207 right now. 207 on that. I'm going to put a sell order on UPS just to have something working here at 291, 295, I guess I'll put it at. All right. SLNO Biotech expecting a PDUFA by Thursday, showing relative strength today, possibly an announcement coming early. SLNO. Thank you very much. Selena Therapeutics. Trading about $51, a little over $51. Very choppy stock. But again, these PDUFAs are fairly important. It's coming by Thursday. Yeah, getting a little bit of a bounce here today, a little up about 2%. So UPS flattening out a little bit right now. FedEx coming in. Suzanne, question on highlight the primary differences between a straddle versus a strangle. How did I come up with my strike price, with my exit price on it? Basically, I just took, I just basically said I'd like to make about 50% if I can get that on a Tuesday or Wednesday. Because well, if we get any kind of a nice move like that, you have to watch it because of the fact of you know where you're at as far as your strike price is concerned. If the strike price is in the money now on FedEx, it doesn't matter. We get the same strike price, so we're obviously in the money to the short side right now. So you'd like to see it keep going down, because if it moves back up from here back toward the 240, 250, we're going to drain premium, and the price is going to go back down a little bit. But I'm going to give this thing some time. On a strangle, of course, it's a different situation. You've got two different strikes. So once you're in the money on one of the strikes, then you'd like to see it keep on going that way. And if it gets fairly far extended into the money on one strike and then starts to reverse, that's a good time to take the profits, because it's going to go against you as it moves back toward the other strike price. So if we get UPS, which is trading right now at 110.50, and we've got 110 puts, 111 calls, we're right smack in the middle. In other words, this is where we get in. We do a straddle. We're trying to take a strike price where the stock is right now, at the money strike price. In other words, if it's trading at 240, 250 on FedEx, that's what I'm going to look for. If I'm looking on UPS, it was trading between 111 and 110. So I can't take a straddle on it, because I don't have it's not at a strike price. So what I do is, if it's trading in between the 111 and the 110, like 110.50, then I take the 111 call and the 110 put, and that becomes a strangle. Just a matter of where the price is at the time, and then of course how much I'm paying for it. Now the stock is going to have to move a little bit more on a strangle to make money than it does on a straddle, because you're already out of the money on both of them. All right. rate when you're doing a straddle. So it's got to move 50 cents just to get to your strike price. So the stock has to move a little bit more to make money on it. But you pay less for a strangle than you do for a straddle. Straddle, but they're both at the money, so they're both going to cost about the same, and they're going to be more it's going to be more expensive than doing a strangle. Right. Coming up on 12 o'clock here. Getting some lunch here in about 15 minutes or so. Suzanne, no problem. Yeah, I appreciate the questions on straddles and strangles. I try to lay the stuff out in the videos as best I can, but I mean, there's always going to be questions because, listen, there's a lot of nuances to these things too. Nothing's black and white. There's no methodology that's completely black and white. Everything is there is nuances to it. There's exceptions to it, so you have to be very cautious about these things, which is it takes time to learn exactly the best ways to do these, and you know why UPS is a good one today, why FedEx was a good one yesterday. Sometimes they work, sometimes they don't. But again, in this market right now, because we really don't have a confirmation of a bull market or a bear market right now. We had a correction, we're bouncing back up again. We don't know which way we're going. I prefer to take trades that are fairly much non-directional right now. Swing trades are very difficult. Again, at Amazon, I took today's calls when I get in it because I wasn't going to swing it. I was going to get out today, and I was lucky to get out. I mean, it went against me pretty hard, and then it bounced again, and I took profits, and it worked well. But that's this is the kind of market we're in. We have been in this market since the middle of December. Very, very difficult market to trade, and most of the money is coming in on intraday trades, unfortunately. And over the years, at least for my trading, most of my biggest profits came typically from swing trades. But you have to have a market conditions that are conducive to swing trades. The number one thing I talked about in the video I did yesterday on errors that retail traders make is not taking the market conditions into consideration when they put their trades on. And big difference between trending markets and choppy markets. Trending bullish, trendy bearish, gap up and then gap and goes, gap and go flat, gap and go down. There's a lot of, you have to be able to analyze the market and make a determination of whether you should take trades at all on these low probability trading environment days. I mean, this is pretty low probability right now in the market. We're up, but we're not going anywhere right now. So this is a low probability. When you're having low probability days, you either don't take any trades, you take very few trades, and any trades you take should be smaller risk. When you have a trending market, then you can be more aggressive. You can take more positions. You can put more risk on. You can let them run a little bit longer. But the first thing is you've got to be able to identify the market conditions, and that was my first error that retail traders make. That was the first one I mentioned, and the first one I described was not taking market conditions, both the 5-minute and the daily, into consideration when they take trades. A lot of traders don't pay any attention to any of that. They look at trades, they're going to trade, they like this setup, I'll take it. They don't even look at the market. They don't look at relative strength. They don't look at relative weakness. They don't understand, they don't have the SPY super system. They don't know whether institutions are in the trade or not. And these are the people we're trading against. So under these circumstances, we should be able to consistently make money against those folks. And the reason that a lot of people don't is because of the errors that I mentioned yesterday. You've got to overcome those errors, which most of them are related to emotional reactions to trading. All right, enough of the soapbox here. I tell you on Pat Nation, for confirmation of a D1 on the SMA, D1 SMA break on the M5, do I look for more than just the M5 candle breaking and then another candle? You know, typically what I look for is if I'm looking at M5 candles, if I'm looking for a confirmation of a break above or below a support or resistance level, I'd switch to Heikin-Achi candles and I look for a flat bottom Heikin-Achi candle for a bullish confirmation and a flat topped Heikin-Achi candle for a bearish confirmation. Now, if you're looking at the day one, at the D1, and it's breaking through a confirmation, breaking through a resistance level on the day one to on the D1 on the daily chart to the upside, you're really not going to have confirmation until the next day. You're not going to have confirmation that break has occurred until you get another daily candle above it. Suzanne, yeah, you learned how to trade the system in 2023 and 2024. Yeah, big difference between then and for since December. This is a non-directional market. This is a very difficult trading environment. And this is why a lot of retail traders I know they've gave up since December, because they learn how to trade one way with a bearish market or a bullish market that's trending, but they don't know how to handle choppy markets that you really can't swing trade in. And they keep on trading the way that they traded before, and it doesn't work anymore, and they lose their money and they get discouraged. I didn't post the. You should have got it sent to you, Suzanne, on the common mistakes video. Rory sent that out to everybody yesterday. I'll see if I can find it to post. William, you want me to soapbox as much as I can? Hopefully, folks will hear it and do it. Yeah, I hear you, William. You know, you see a lot of folks that keep repeating the same mistakes over and over again. It's tough. Listen, it's tough to change your mentality, trading mentality. It's really, really hard. You got the common mistakes video, Doug? Thanks, I appreciate it. I put some time into it. It took me some time to do that. Can't do it all in one stretch usually, but I lay out what I think are the mistakes, and then I go from there, and then I try to rate them, and then I try to talk about more detail of each one. Oh, really? You turned on closed captioning for this feed and it works? Huh. The video wasn't an email yet, Joe. I'll see if I can find it and post it up here. It was out in a YouTube video that was sent out, but I'll see if I can find it here and put it in the chat box. That's pretty interesting, the closed captioning. I wonder if they can get all my stuttering and messing up of words accurately. So SPY coming down below the VWAP now, still above the 200. I'm not particularly anxious to jump into anything right now. There was some nice looking setups. His IP coming back down again. Netflix coming back down again. And Amazon. This is the big problem here with this whole market right now. This is the kind of crap that you get into. And I know people want to trade, and this is over trading is the thing I mentioned as I think the number 2 reason that the traders, retail traders, can't consistently make money. Over trading, and this is the problem. If you see a lot of people taking a lot of trades today, they're making a big mistake. This is not a day to be taking a lot of trades. You know, whether it's bullish, bearish, it's not a day to be taking trades. This is an LPTE, low probability trading environment. The market's up, yeah, it's green, but it hasn't gone anywhere. We had a nice move up this morning, and now we haven't gone anywhere. So why would you be jumping into trades right now? Because you want to trade, not because there's any technical reason why you should be jumping into trades. You want to trade. That's it. Which is why the only trades I'm really taking, and I know everybody wants to trade. You know, I haven't had very many alerts lately because there hasn't had any many conditions for it. I don't want to send out a bunch of losing trades to people just to take trades, so I don't take any. And people get discouraged at that, and a lot of times they'll leave the service because of that. But I can't do anything about that. I'm not gonna try to force trades and send out trades just to trade. So that's just the way it is. And you know, if they don't like it, there's nothing I can do about it, because I can only give you what there is. But you know, trading taking a bunch of trades today is a mistake. I mean, it's really pretty simple. Even if you make money on it and you think you did a great job and I made money, I picked the right stock, you're trading in a terrible trading environment, so it's a mistake. Remember, just because you make money on a trade doesn't make it a good trade, and just because you lose money on a trade doesn't make it a bad trade. It's not whether you make money or not, it's whether you're actually following the methodology the way you should. Anti-Envoy said luck versus skill. But the problem is, people that make bad trades and make money on them, it's reinforcing that bad habit of taking that particular trade, and they'll do it again, and eventually they'll lose on it, and they won't be able to understand it. They don't understand why they're not making money. It worked a couple times. Why isn't it continuing to work? Oh yeah, the indicator at the bottom of the screen. This indicator right down here. This is actually this is a modified Laguerre. This is a Laguerre oscillator. This is what the momentum comes from, and it's modified. It doesn't include divergence. It only includes pure momentum. All right, and it runs between 0 and 100. 0 is, I don't know why they have it green, but it's 0 down here. 0 to 20 is in this green shaded area. 100 to 80 is in this red shaded area. Anything that when it's going from green, which is this is trading like at 100, between 80 and 100, and it starts to head down and it gets below 80, it switches to yellow. That's a bearish momentum. It gets to red when it gets below 20. That's bearish. That's very bearish momentum, which is where we are right now on Amazon. All right, and just the opposite the other way. If it's coming up like this, it's going to go going from the up 20. It's going to, you see how it goes from red to blue, because blue is trending up, yellow is trending down, green is very bullish, red is very bearish. Tristan, it might sound weird. You equally enjoy watching me not trade. Well, you must love you get to see a lot of that. You think it's a masterclass on the appropriate time and place. I try to do that, and the thing is, when the market is so bad for so long, like it has been now, you know, it's hard because, you know, for me, I'm trying to do the best I can to teach people to trade correctly under the current market conditions, whatever the market conditions happen to be, and it's you know, I can't say don't trade, stop trading. I can say stop trading. I've done that a few times, but people are going to do what they're going to do. All right, they feel like they're trading. You know, they're in the room. They pay a subscription fee. I'm not getting anything out of this because I'm not getting any trades. You are getting something out of it. You just don't understand. You're not taking trades that you're not losing money on. That's the same as taking a winning trade is avoiding a losing trade. You still keep the money. And Simon, I appreciate that. Yeah, I know you appreciate the lack of posted trades in days like that are LPTE. It's important. I mean, it's very important. I mean, I have people question me, how many trades a week are we going to get? And I tell them, I don't know. And what other answer am I going to give? 10? There going to be 10 trades this week? I don't know. There might be 0 trades this week. There might be 20. I don't have any idea. Why not with the market being flat? Why not take some iron condors? Now, I don't trade iron condors, Joe, and I know a lot of people trade iron condors. If you don't know what an iron condor is, it's basically if the stock is trading in a range, you take a put credit spread below the low strike, and you take a call credit spread above it. You're collecting premium as long as the stock stays in that trend. The problem is on condors that you don't get a lot of premium because you have to go a couple of standard deviations above the current price. I mean, to be safe, you've got to go a couple of standard deviations above the current price for the call credit spread and below the current price for the put credit spread. All right, so that means you've got to have some short calls and short puts that are way away from the money. They're pretty safe, but you don't collect very much premium on them. The premium is very low. Now, if you get in a situation where you've got an iron condor, you may have 7 or 8 or 9 iron condors in a row that make money because the stock stays within a range. Then all of a sudden you're in the iron condor and you get a news day where the stock shoots up, goes right through your call credit spread. You got to close it down, take a loss, and then another news story comes out the same day or the next day on it, and it reverses back down again and goes below the put credit spread that you had on. The stock drops more than it went up the previous day. So you're out of the call credit spread at a loss. You're out of the put credit spread at a loss. You've lost enough money on those put credit spreads and call credit spreads on that iron condor to wipe out about 7 or 8 or 9 of previous ones. Even more than that, I've seen people trade iron condors for 6 months, never have a losing trade, and then have a losing trade 1 month, and they lose out. They take the entire profits that were there and lose them all. So I'd much prefer to do in neutral markets like this, non-directional markets. I'd much prefer to try to find stocks that are fairly volatile and do straddles and strangles on them. That's my reasoning behind it. That's why I don't do iron condors. Doug, you've had that experience with iron condors, that's right. But believe I've done all of these things. If there's a strategy out there that I haven't traded, I don't know what it is. I've traded most of them, and I lost on a lot of them, and I don't trade them anymore. I mean, I've honed this down to where I only take trades that have a high probability of being successful. And you do have to have different strategies for different markets. Bullish trending markets, bearish trending markets. You can do put credit spreads, call credit spreads. You can do straight long calls, long puts. Choppy markets, I like straddles and strangles, and I like doing SPY super system trades off the 5-minute chart. Basically intraday trades. There's a SPY coming down here now. I hope that makes sense on that iron condor, Joe. I mean, I've told people this before about iron condors, and they keep playing. They say, "Oh, I don't believe you. This is," whether they believe me or not. I can manage it. Then I say, "That's fine." Everybody who wants to trades what they want to trade. All I can tell you is we're trading against us as retail traders. We're trading against millions of other retail traders around the world who don't have the same information or knowledge that we have. So if you're able to keep your emotions in check and trade correctly, you should be able to beat these people most of the time, because that's where we take our money from. back to trading so I can get ready to eat lunch. FedEx not doing much. Trading at the straddle right now is trading at 533. And again, we paid $6.15 for it. That's down about 80 and 90 cents. That's really not that much on a straddle or a strangle. UPS going at 204, paid $1.91 for it. I put the link in the chat box for the recording on the errors that the retail traders make. It's in the chat box. By just bouncing and bouncing and bouncing around. Okay, I'm gonna get some lunch. Market's not doing anything. This is an LPTE right now, low probability trading environment. There are some stocks that you can trade, but there's none of them really following through very much. IP was a nice setup. It's kind of pulled back. Amazon I grabbed this morning was a nice setup. The daily just didn't do, not doing much right now. I took some small profits on it. Crowd's not doing anything. It bounces back down again. Netflix has been a nice setup, but again it's pulled back. Tesla, as I said, this morning went up to the 200-day moving average, pulled back. Now it's bouncing up toward it again. Just chop. This is all choppy. MLGO was a good Momo trade today, coming in off this VWAP right here. When it broke above about 12, and then it actually broke above 20 right here on MLGO. Pretty nice, almost 20. Pretty nice move in this thing. I did trade it quickly today for a couple bucks, but again, this is not something I would recommend, especially for anybody who's fairly new. Momo trades are tough. Well, I shouldn't say tough, they're risky. All right, so I'm going to go ahead and shut down YouTube. Thanks so much, YouTube folks, for being here today. Appreciate it. Back again tomorrow.